If you must be profitable or become a profitable trader, you must be diligent first to instruction, second, observation, and thirdly, to execution. What that means is that every instruction you receive in your course of training, learning how to trade Forex, you need to be diligently committed to it. And secondly, you need to observe your chart for every instruction or what you have learned to be able to identify it on the chart. Then thirdly is your execution, your ability to put into action all that you have learned is what will guarantee you as a profitable trader. Welcome once again to Royal Forex Academy, and in this lesson we want to look at how we can find entry trading the fair value gap, which is the improper price action that we've discussed in our previous video. So if you are coming across this video for the first time, do well to watch the previous video where we talked about how we can identify what a fair value gap is all about in any market scenario. So today we are looking at how we can make an entry, execute our trade on this fair value gap. We've done some series of videos in the past where we talked about your entry confirmation, and we talk about using candlestick pattern, using the chart pattern, using divergence, using a method of break of structure and chart pattern. So the same thing is what you'll be using to execute your trade as far as this is concerned. So basically we begin our trade. Number one checklist is for us to determine the directional bias of the market. So looking at my chart, you will agree with me that this price is a downtrend. Okay, so now that you know the trend, price is pushing to the downside and we are obviously in a downtrend. So now that you know the trend of the market and you are so much aware that price is bearish, meaning we are in a downtrend, the next thing we need to take note of as far as our price is concerned is for us to identify our point of interest. I remember in our previous video we said that our point of interest can be a support and resistance zone. It can be another block, a supply and demand zone. It can be a fair value gap. So in this case we are looking at a fair value gap. Now this is price coming down, right? In all of this place we are not having a fair value gap, and when price begin its movement from here, we are having a fair value gap here. So we have done a video on how you can identify a fair value gap, so you can go to that video if you don't know how to do that. So this is our fair value gap up there. Okay, and here again we have another fair value gap from our price movement. So here was a fair value gap. Okay, so this fair value gap I marked actually plays out on this particular candle. Okay, so the fair value gap is on this candle. So and afterward, this price build up from here. Now price begin to build up back into filling of this fair value gap. So you can see how price build up and fill in. So when price fill into this gap, what do we want to see? We will now need an entry validation in order for us to make our sell entry. And if you look at this, even on our H4, you realize that our commodity channel index is at the level of 90 and 80, which also signify to us that this has come to a reasonable end of that pullback. So having established that, we will now move to let's look at our H1. Beautiful. You can see that build up back into our H1. So remember what we said in our previous video. We say one, we can use a candlestick formation to make our entry. And here we have bearish engulfing candlestick. So this bearish engulfing becomes our validation for our entry. So we have our entry here. Okay, and then here is our stop loss. That is another way we can make entry. Second, if you look at this critically, you realize that we have a divergence. From this zone, this is a typical divergence. So we have this divergence playing out. And look at our indicator window. So this is a typical divergence. So this divergence validates that we are actually at the end of this particular retracement, which fill into that fair value gap on 1 hour time frame. So when we see that the fair value gap has been filled already, so we are looking for entry, and then we have these engulfing candlesticks. And then look at this rejected pin bar as a confirmation and a follow-up. And then you can see price falling to the downside with this divergence. So we have more than one entry. Let's look at 15 minutes and see how it plays out. The same thing. You can see that even on our 15 minutes, this is a divergence. Okay. And we said another method we can find our entry is by the use of market structure. We can use a break of structure to find entry. And how do we do that? Look at this now. Price successfully finished filling into this zone. And at this point, we are having our higher low, and this is our higher high, right, or the lower time frame. But we know that this is to fill the imbalance. So when this imbalance was filled, price now came all the way down and break structure here. So this break of structure, immediately we have that break of structure happens here, right? So this is where we have that break of structure from that price movement. So when this happens, price breaks structure to the downside. Beautifully well, price breaks structure to this downside. So now what happened? Price pull back. Again, we find entry from this pullback following a break of structure on this lower time frame. We find this entry by still using the same techniques of a fair value gap. So this fair value gap works on all time frame. And then look at it. After we have this break of structure, price pull back, and we have a fair value gap. Can you see that? Here is our fair value gap on this candle. I'm trying to zoom out now so it can be bold enough for you to see. So you can see that. So we have a fair value gap on this candle. You can see that fair value gap. So now look at what happened. After we break a structure here, price now came back, pull back, and fill in this fair value gap that we are having here. That is our fair value gap. So price came in, filling that fair value gap, and then gave us a candlestick formation to make an entry. And this is the bearish engulfing candlestick you are seeing, and that becomes our entry to the downside. So this is how it works, and from there price keep on pulling down and pulling down. So this is how interesting you can take advantage of this. And I believe you have learned something new. Do not forget to give this video a like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video.